Welcome to F.A.C.E, Brian. Waiting for your mic. Unmute your mic.
Okay.
There we
Is
go.
everyone hearing me?
Got you, Brian. Nice
All
to
right.
meet you.
Nice to meet you as well.
Yeah, glad we were finally able to pull this off. Have you been in
I
Zoom
know
before?
it's been a bit of a process. Yeah, I've been using Zoom quite a bit actually. Since
All right,
this
so
thing
why
started.
don't you go ahead and share your screen?
Sure.
And then I always start here, Brian. You know, I'm interested in the long and winding road that people take to get from point A to B. And
Okay.
maybe you could tell us a little bit about what you were doing before you got involved in the markets, and you know, did you have mentors? What was your first job? A little bit about your journey, buddy.
Yeah, no problem. So I am a mechanical engineer by schooling. That's what my undergrad degree is in. I'm in a master's program right now to get a degree in data science, but was hired out of school into a manufacturing engineering role. And but basically trading's always just been something I've been interested in. Starting in school, read the Market Wizards books, read Michael Covell's book on trend following, and then kind of just went down the rabbit hole from there. Started playing around in Excel, testing things out, and then eventually ended up going down the quantitative analysis slash systematic trading path.
Okay. So why quant fiction? There's a lot of bullshit out there.
Well, I mean, I don't. The real story is I was trying to. It all started. I was trying to write a blog, like a trading blog, with just some of the ideas that I had floating around, and I was just going through names and basically just brainstorm a bunch, and then everything else was either taken as a domain or the domain was extremely expensive. So this is kind of the one I ended up with.
All right. Okay. So process of elimination.
Yeah, exactly. It was the first one that wasn't going to make me pay thousands of dollars.
All right, Brian. So, I mean, this is an interesting chart that you have up here. It's kind of like people who follow, you know, what people are Googling. And you're doing it with Twitter. So why don't you explain what the dotted lines, the solid lines, and what you were seeing here that maybe gave you hints of a pretty good blow off bull move in Bitcoin, and what it might be saying now.
Sure. So this is basically a couple of different sentiment indicators, and I thought it was just interesting to pull up because it's not exactly what one might expect right now. I could pull up a longer term chart as well, just to kind of give some context. So this is a Bitcoin chart. Looked like we had like a pretty solid rally for almost a month, and then the first real correction over Thanksgiving, and then a new rally up to all-time highs yesterday, and then a bit of a dump this morning.
Yeah.
So against that price action, this just there's two indicators here. The first one being a sentiment score, which is collected from a Twitter social media feed, and then that has some natural language processing in there that determines whether the sentiment contained in the tweets about Bitcoin is either positive or negative, and then compares it to the previous 20 days. So this solid line is a sentiment, and that's actually a relative score. So the last reading was 59. So basically it means that compared to the last 20 days, it is slightly more bullish than average. And I just thought it was interesting to note because typically when you see run-ups, especially to all-time highs like we had yesterday, you would expect a lot of euphoria and positive sentiment in the market. But we see that over the past 2 days, it was hovering in this low, below 50, like 40s range. But I thought it was kind of interesting, which doesn't really support the notion of a blow-off top from sentiment perspective. And then also what you would expect to see, this dotted line is just Twitter volume. So these are all the tweets talking about Bitcoin. And again, you see from starting about the 27th, there's this gully basically of tweets about it, and then it ramps up in the past like 48 hours or so. So that's just an interesting backdrop, and you see the tweet volume gathering here, so that might be something to watch.
So would you interpret it that there's not euphoria after a euphoric move as being bullish because it's not being the rally really in the last few days really hasn't been embraced?
That would be my interpretation of it. If you're looking for a blow off or a topping process, I would expect that to happen when the most people are euphoric or bullish, and there's no one left to buy. So that's the backdrop from just a sentiment perspective. I think that's always a good place to start, just to get a read on where the rest of the market kind of thinks. And then the rest of the analysis I'm going to go through are just a few different statistical reports from Market Science, which disclaimer is a company that I help run, but this is also what I use for my own daily trading process, which is, so it's just one and the same. So here we have just a look at what happened yesterday in Bitcoin, and we see that the volumes and the range for yesterday were higher than normal. And based on some research that we've done, when those conditions occur, usually is a setup for a choppier day. And by choppier, that's just indicating that there will be more movement relative, more intraday movement relative to the actual close to close movement. So you would expect a wide range and then a close closer to where the day started. And I'll go back to a lower time frame here. And so you can see that, I mean, almost we start the day at the midnight open, or the midnight UTC open. So it's about 9 Eastern time, and we're 5 hours behind the UTC. And you can see already today, that's basically what's happened here. Traded sideways for a bit, got a run up by a few hundred points, and then this drop. And so in a chop day, what we're looking to do is fade the extremes of the day. So we have our projected range here, and then this just gives some like confidence bars on today's range. And so we're looking at a maximum of price about 18,000, and then the high of being like 21.4. So anywhere towards the extremes of these ranges are where we want to fade. And I just have the weekly open marked off as a level. And actually, while we were doing this webinar, I was doing a bit of buying around like the 18.5, 18.4 level, and we're trading at 18.8 or so right now.
Okay. So I'm getting a comment from one of our attendees, Alicia. Didn't the British government restrict their hedge funds and investment advisors from selling products related to crypto? I think they have until Jan 6 to liquidate their positions in crypto. Is that going on?
I am a American resident, so I really am not sure what the regulations are. Okay. I'm sure each country kind of has its own regulations.
You would think it would have an impact.
Well, that's true. There's a lot of things I would think would have impacts, but
and they don't.
Yeah, you'll see exchanges get hacked, or millions of dollars worth of Bitcoin get lost somewhere or stolen, and you would expect price to react, and sometimes it does, sometimes it doesn't. Okay, so are you mainly in the crypto space? Is that your wheelhouse for trading? Yes, for the most part. And mainly the reason for that is that the data is either cheaper or free from most of the exchanges. And there's also just a lot more data available for most of the exchanges. Okay. So from an analytics standpoint, it's just nice to have more information available. Okay. But so, I mean, I'll speculate occasionally in the traditional markets when things get like way out of whack. I was more active around March when a lot of forced liquidations were going on, just because a
during
lot of
COVID.
things
Yeah.
got completely mispriced. Yeah.
Okay. What is XBT again?
Oh, this is just a different symbol. A lot of the like derivatives and futures products will use XBT as opposed to BTC.
Okay.
And if you look as well, like the CBOE products will use XBT, whereas CME uses BTC. So they mean the same thing. It's kind of like XAU for gold.
All right. And does your stuff mainly give you ideas for what kind of time frame trading, for day trading, swing, position?
Yeah, so predominantly, I guess you would call it day trading. The focus is to get an idea of what I expect to happen over the next 24 hours. So every day at the close, in this case would be 7 p.m. Eastern time, 6 p.m. Central time is the midnight UTC close, and that's what most of crypto uses because it's a global 24/7 exchange, and they need one kind of settle time. So that's what's typically used. And then we're looking at what we expect to happen over the next 24 hours in terms of price direction, the price range or volatility, and then also the trendiness or choppiness. And it's between those three characteristics is how we're trying to form trade ideas.
Okay.
And then, so I touched on the first two parts. We're projecting this 24-hour block to be choppy, so we want to fade extremes, more of a mean reversion style. We have our ranges, projected ranges marked out, and then we also have just a few just statistical edges. These are very simple signals that we look at. So basically, we're in the upper half of the recent range. We're closing above most of the popular moving averages. So this is a weekly VWAP, monthly VWAP, 100-day moving average, 50-day moving average. And then both the short term and I guess medium term RSIs are elevated. And then this just highlights what has happened historically when those conditions are met. And we can see that there's a positive or a bullish edge indicating the Sharpe ratio is higher than just buying and holding when all of these conditions have been present. So that's giving us a bullish edge, and why we're focusing on buying dips as opposed to selling rallies.
Okay. And I see a fractals up there. Are fractals part of quant analysis?
Not traditionally. I think this is just something that's more interesting. I don't know. This isn't like systematized in my trading per se. This is just if everyone can see, this basically just looks at the past 30 days and the price action, and then there's just like a simple machine learning algorithm that looks at all the prior days and tries to find instances in the past that are most similar to the recent price action, and then looks what happens the next 24 hours. Okay. So here we can see like when we have this rally, most frequently, well, I guess there's no strong edge here. It looks like we have 3 days that had positive returns and 3 days with negative returns. So there's no, I guess, strong edge there. And then this just maps out these instances on a longer term price chart. So you can see if these patterns or fractals occurred, like if all 6 of these were to happen at local tops or absolute tops, that might be telling. I'm not seeing anything super conclusive here.
Okay.
And then just there's also a analog of that for the low time frame as well. And this just does it on an hourly basis. So
do you have go ahead, Brian.
Oh, that was most of the plan. There's also a few different stats I tend to look at just for day of the week biases, but there's really not anything. Today would being Tuesday.
Yeah.
Nothing really stands out
Do you notice
special.
reverse? Are you a believer in turnaround Tuesdays?
I've heard the term. I would
You haven't
have
noticed
to.
reversals on Tuesdays?
Yeah, so here's this performance by weekdays over the past
Mm,
365 days. And it looks like Tuesdays have been positive
mm.
over the past year. So I can't say that's a turnaround Tuesday, but also displayed our confidence intervals. And what this says is if anything falls within these bands, the effects could essentially be attributed to just random noise. And you can't say for certain whether this is like a true day of week effect or it could just have been generated randomly. So not a lot of confidence in that.
Okay. So do you have a business model? Do you teach? Do you have a subscription for people to receive your work? I went to your website. What do you do besides trade your own account, Brian?
So
Anything?
all the reports I've shown are from this company Market Science that I run with another trader. And this is
Okay.
just a monthly subscription. Unfortunately, our Black Friday sale just ended, but I can give a discount for anyone who's interested. If you just use, we'll just do F.A.C.E, F.A.C.E as a discount code. They could do 20% off for anyone listening who's interested in subscribing. But
Okay. Where
what
did
it,
they go to? www.marketscience,
that's correct. Yep.
marketscience.com. Okay.
That's, yeah, exactly. Marketscience.com with 2 S's.
Okay.
And
Marketscience.com. Okay.
includes all the reports I've shown. We also do a weekly report dissecting the commitment of traders report that the CME puts out for Bitcoin futures. And then there's also a series of longer form research articles that go into the data and explain why we do what we do and why we believe the statistical edges that we come up with.
Okay, Brian. Well, I really appreciate you coming here. This is, I'm kind of a chart guy.
I
And,
know.
but, I'm open and believe that there are many ways to approach markets. And here's one. And let me ask you this, it's kind of a key question. When you're using this type of quant research for trading ideas, how do you quantify risk?
So typically in my own trading, I would just risk a fixed proportion of
Okay, like
capital.
1-2%.
Yeah, exactly.
Okay,
Well, I guess that's tricky. That's an approach. Like the systematized work I do, there's calculations that go on in the background that kind of calculate the ideal position size, and that
okay,
that's available. Those are free articles that I just have on my personal blog. So if
okay. So
anyone wants to go to
quantfiction.com is a
quantfiction.com,
blog. Yeah. Okay. Yeah.
um,
I. Yeah.
and
Okay.
there's a series of articles on position
Yeah.
sizing for practitioners,
Okay.
and so those 3 articles essentially address the Kelly criterion, if anyone is familiar with that, and some of the drawbacks and flaws that people typically run into if they apply it strictly, and then an alternative approach to the Kelly criterion for sizing positions.
Okay. Well, thank you so much for coming here and edifying the community with, your approach to crypto. And it was really a pleasure meeting you. Thank you for your time, Brian. And I wish you continued and a lot of success going into the rest of 2020. And may blockchain profits just, rain down on you and all the people you work with. And all your subscribers. Wish you guys the best. I'm rooting for you.
Well, I appreciate that, and same to you and your F.A.C.E community.
Okay, Brian. So again, everyone, you could find Brian on Twitter at Quant Fiction, and if you want a subscription, can you give that that website address out one more time, please?
Sure. Let me see if I can get it in the chat here.
Yeah, maybe you could post it on your way out.
Yep, no problem.
Okay. All right. Well, thanks a lot, Brian, and appreciate it. I'm glad that we were able to have a discussion today. And Merry Christmas, Happy New Year, buddy.
Yeah, happy holidays, everybody.
All right, everyone. That's Brian Blandin, and now you know where to find him. And a very interesting way to approach trading. And if it's appeals to you, I think that's why I do these, because Jack Schwager says find a style that fits your personality. Maybe Quant is for you. And oh, Monica liked it. Okay, everyone liked it, and that's it. So enjoy the rest of your day, everyone. We'll see everyone tomorrow. Remember, don't just count your cryptos, count your blessings, and we'll see everyone tomorrow. Adios. You're welcome, Laura, Monica, Desmond, Louis. Adios.